Welcome back. Market still roaring, and it is time we got you the 22nd wealth creation study. Motilal Oswal has released the findings of this 22nd annual wealth creation study for the period between 2012 and 2017. And here are the top takeaways. First, TCS is the biggest wealth creator for the 5th time in a row. Ajanta Pharma is the fastest wealth creator for the 3rd time in a row, and Asian Paints is the most consistent wealth creator yet again.
Well, banking and finance has emerged as the biggest wealth creating sector, while the cyclical downturn has driven wealth destruction of 6 trillion, while the wealth created during this period has been nearly 39 trillion rupees. So very interesting over there.
Absolutely. And 29 trillion rupees, of course, that was what you spoke about. Raamdeo Agrawal is the co-founder of Motilal Oswal Financial Services, and he has joined us now in the studio. Raamdeo, it's always a pleasure having you with us. We've gone through most of that study that you gave us, and maybe we can show the copy as well.
Yes.
Anuj, the copy is with us.
Yes.
That's the 22nd wealth creation study. Well, first up, Raamdeo, I wanted to ask you, what is the incremental lesson that you have got as you and your group look for value? Yeah. What is that incremental value in the 22nd study, and what is the combined wisdom that you have got?
Yeah. So good morning, viewers. This is after 2.5 months, kind of the study. Yes. So, one of the thing about investing and making a lot of money in the market is that you need a compounders. And India produces a lot of compounders like HDFC Bank, HDFC, Infosys. So Peter Lynch was asked, what is your biggest learning of your investing career? He said one of the biggest mistake he committed was that he sold all his stocks too soon. Like he bought Home Depot when there were 4 stores, and he sold it the moment it tripled. After that it went almost 100 times more.
Okay.
So, the great companies, let's be very clear, and there are very few of them. Great companies, they live much longer than what the investors they think. And they create much bigger money than, this so-called quick, double top or whatever, quickly you sell because it is doubled or something like that. So there's a lot of money to be made. So what happens is, in compounding, what happens is, that I'll just try to give you a simple example. At 25%, a rupee doubles in 3 years and goes 10 times in 10 years. So when a rupee becomes, say you bought at 1 rupee something, and that 1 rupee goes to 10 rupees in 10 years. So how much you have added? 9. But in next 10 years, that same 10 becomes 100.
Oh, then
10 into 10. Then it adds actually 90 bucks. Then the third 10, it's like 21 to 30. Then it goes to 1000. And at that time, it adds 900 rupees. So it is still called 25%. But if a company you bought, see your purchase price is frozen at $1, and if it keeps growing at 25% for 30 years, what it does? Your 1 rupee becomes 1000.
The longer you stay, the more
longer you
much
stay.
more you make.
So longevity of these compounding machines are very important characteristics.
Okay.
And it is not written on the face of any company that you will...
Exactly.
Yeah.
Is it written on the face of Bitcoin, Raamdeo?
Very tough subject, and it's the hottest subject right now. But I have zero knowledge on that. Okay. So,
well, it's not a company, so you're forgiven.
Raamdeo, good morning. So, let's talk about Indian context.
Yes.
For example, let's take, for example, Maruti, and you liked it in the past. Yes. It's been one of the biggest wealth creators, and we were just discussing it. Yeah. Issue price was 125.
Yes.
We're now talking about 10,000 almost on the stock. But and it's truly been a great company, right? But do you have the visibility for the next 10-15 years that some of these great companies will continue to remain great? Because that's the big one, right? Hindsight is 20/20, but to predict the next 10 or 15 years.
Yes. So that's where this framework of, it will look like a little slightly technical FFHH. So you have to get into this thing, but basically you have to look at the industry character. See, first thing is whether there is going to be need for the car at all. The concept of car which is 100 years old, is it going to be lasting for next 100 years? That you have to make a call. So once, if that is going to be so, the car is needed for the basic transportation of the masses. In that case, who is going to provide this car? India today does 3 million, China does 24 million. 10 years back, China was also doing 3 million. So I'm not saying that we'll do 24 million, but even if you do half of it, say 10, 12 million, who is going to provide that car? Today, out of 2 cars, 1 car is coming from Maruti. So you have to look at the industry structure. There is no rivalry. He is 51%. There is second guy is 15. There is no third. And this country needs so many millions of cars. What do you do? Then, so the industry structure has to be understood before passing the judgment.
But infrastructure was ready.
You have the cars, roads will come.
Okay.
And the guy who is buying, he doesn't care whether if you have the car and I am a young guy with a new wife and family, what do? I go and buy the car.
Absolutely.
It is for me to provide the roads.
Raamdeo, you know, we always talk about sectors that create wealth, but one sector that has almost never created wealth is PSUs. And you write very beautifully in your report about how there could be a turnaround in the PSUs because of what the government is doing. Would you bet on this space?
No, turnaround we are saying because from literally 50 companies and 50%, see, till about 2002 or 3 of our wealth creation study, we started study in 96. From 96 till 2003, every year 50% of wealth was created by PSUs. It was really commanding heights of Indian economy. And then it started sliding one by one. And 3 years back, only 2 companies came in the list. And 2% of the wealth was created. So literally, lights were out in PSU entire culture. Now, because of this oil revival, the subsidy going and HPP, IOC coming through, Petronet LNG coming through, some revival has come. But things couldn't have been worse than what it was. You know, I'm literally zero. So from zero, it can only be better. Maybe there will be privatization, maybe there will be some sell-off, maybe they will tighten the management. But you know, the competition, as the competition increases in the economy, in various sectors where PSUs are operating, it will become even tougher for the PSUs to compete.
Okay. Well, you know, in your, it's your page 31 that was very interesting. I mean, where you have the confluence of your comparative advantage, competitive advantage companies and the growth advantage companies. Well, I might give you that summary. They've looked at companies which have a competitive advantage because it is difficult to get competition, because suppliers don't call the tune on various parameters, as well as those that have continuous growth advantage. And the confluence has actually 2 housing finance companies. You have Dewan Housing and LIC Housing. Is not that a sector where you can get competition easily and where margins are genuinely thin?
Yes, but competition was always there. There were banks who were already providing. But just the size of the opportunity is so big right now. Of course, the competition has come. It will dent the conversion, the spreads which you have. But you know, all the lending companies, one of the biggest problem world over, they go under not because of the expenses or lower margin, because of the bad underwriting. When you give loan to somebody who doesn't return it back, then you are in trouble. All the PSU banks are in trouble because money is not coming back. Not that their expenses are more or anything like that. So housing finance is one thing where at least at this stage of India, where houses are literally not there.
Diligence is most important.
Yeah. So what happens is that if your collateral is there, you will have delay in payments, but loan loss will not be there finally. Money will come back because the collateral is solid.
Sure.
You know. So you have to just avoid the fraudulent cases. But if you have the good underwriting skills and collaterals are there, with delay also money comes back.
Okay. Raamdeo, you know, it's interesting. We've been talking about a bear market for pharma, but for the last 3 years, it's a pharma company which has been the fastest wealth creator, right?
Yes,
Ajanta Pharma. In the past also, we have seen a couple of pharma companies do that. So, do you think Indian pharma will still keep finding, you know, these stories which will, you know, keep, you know, generating wealth despite the kind of negative headwinds that we have right now?
Yeah. So see, pharma and IT both, where India has a huge prowess and opportunity is global. But since it was very America-centric, pharma, you know, kind of exports were building up, and they had become very large globally. But there are a lot of profits were coming from US, and there is a structural change in the US, the way US is buying the generic pharma. I think there is a consolidation at the distributor level, and the competition among the Indian players also for the same molecule had also increased. So these guys, they have to see, world has to consume a lot of generics as it ages and the population grows, and nobody can produce the quality and a price at which Indians can produce. So obviously the business belongs to India. Now, who strategizes in such a way that they're able to make money out of that? See, they're still making money. They're not making as filthy money as they were making 3 years back. So there is a reset of the profit level. And I think they'll find smarter ways. There's biosimilar now, you saw the biocon.
Yes.
So they'll enter a newer phase of it. And they're the first. Dr. Reddy did in 95, the first to file. Now they're the first in biosimilar. So there'll be many more riches. But finally, India will be there in generic space.
Okay, and actually you have many more as well. To be fair, Cadila Healthcare, 33% profit growth every year, compounded annual for the last 5 years, and 31% price growth continually for the past 5 years. And likewise for GSK Pharma, you have a very high rate of growth, Divi's Labs. So,
actually, one of the things is that of the cap and gap. Cap is a well discussed subject. It is already there in the, if you Google, you'll find a lot of literature on competitive advantage period. For how long profits remain intact in the companies. You know, there's no birthright that Coca-Cola will keep making money. You know, someday the companies mature and they die out. Like Century Textile in 80s and 90s, they were making huge amount of money. Now they are struggling. So, so there is always a life cycle of the companies. So in that you have the competitive advantage period when you actually make huge profits. You are at peak of your health, and then growth advantage period. So what is this growth advantage period is a new concept written first time by us. So what happens is, we have observed when we studied the life cycle of the companies, we find that companies, they start growing at some age, say after 5 years, 7 years, when everything is fit and the tailwind is there, there is a growth. The companies start growing for various reasons, and once they start growing, they keep growing for 5 years, 10 years, 20 years, like HDFC Limited. Now let me tell you this, I mean, we have covered HDFC
yes,
extensively
it's also
here.
there in your...
So they started in 78 for 10 crores, and I think they got listed around that time. And in 81, if I'm not wrong, they made first 60 lakhs profit, and then they made 1 crore profit. And then since then, last year they made 11,000 crores profit. And this year they will make more than 13,000 crores. You know, so if you bought 100 shares then for 100 rupees, till about 87, I remember it used to be trading for 100 rupees shares used to be trading for 130, 140. It used to trade on yield of 8-9%.
Okay.
So Raamdeo, that's about growth advantage, but coming into competitive advantage, I wanted to ask you, how do you realize when a company has reached its peak as far as competitive advantage is concerned? For example, Titan, we're going to profile the company now. It's gone through a lot of ups and downs. What gives you conviction?
Yeah, so that's where the, again, coming back to the industry structure, how exactly they are beating the competition, quarter after quarter, quarter after quarter. So is there, who are the guys? So if you look at the industry structure, first you have to see whether there is how, once the company starts making money, can the new guys come and spoil the party? That's what really happens in capitalism. The moment you start making money, 10 more guys will come in, and then they'll spoil the party. And because nobody wants you only to make money. So where is there any barrier to the jewelry, say Titan? So now in Titan, it's open for all. I mean, you can open a jewelry shop, I can open a jewelry shop, nobody can stop. But can I compete the way Titan can compete? Because there are so many jewelry shops, but there is only one Tata, on which name there is a trust. Okay, then once you go there with a trust, they're not going to buy just because the Tata name is there. The designs has to be there, the customer service has to be very good, and then a whole lot of things they do. So Titan has won. If they started selling, I think, jewelry in 2000, early 2000, 2001 also. Otherwise, it was a watch company. So watch itself, the Titan brand was fantastic. Then they created this Tanishq, and they have attacked to one of the largest segment of India, where jewelry is such an integral part of everybody's life here. And ladies, they love to splurge on jewelry. They have to. There are segments of your office going jewelries and the marriage jewelries. So they are. So it's a very large segment. And and Titan is not a #1 jeweler in any of the cities. They are number 3, number 4. There is always a local jeweler. So there is a long way to go for them to gain some kind of share. And now with GST and demonetization and not cash dealing coming through, now the quality advantage people had, in the sense that they used, the competition used to say 18 carat, but actually it will be 15 carat. Okay. Now that will go away. So all the advantages of unorganized will go away, and Titan will have a good
Sure.
time.
Actually,
Okay, I have just
we
one
should
more
pull up
question.
Titan, actually.
Yeah.
Look at the way that stock has risen as you were
It's been
talking.
it's been a
Raamdeo.
huge multi-bagger, of course, but today as well, of course, the stock's up and it's hit new all-time high. Should be index stock as well, Lata, at some point, of course. Raamdeo, one more thing from my point of view. 70, you can correct me if I'm wrong, 70 to 80% of these companies are, in some sense, consumption companies, that catering to consumers. And that's been global trend as well. Is that likely to remain the big theme? You've got to catch these companies.
That is going to remain the biggest thing, because one thing you can be guaranteed: as the economy grows, the consumption will grow, and on the back of consumption only the whole show is going to happen. So, and human beings' consumption is very predictable. You will eat 400 to 500 grams every meal, and in the meal also you'll have whatever curd or this
protein
or that. So you can actually predict how 1.3 billion people will consume, and with the data analytics you can see even more so what exactly is going to happen. So consumer is one thing around which the whole circus happens in the economy, and it is the most predictable. Now the issue is that companies are smart in creating barriers. Okay, you want to buy coffee, but there will be 3 players in, say, like car. It's open to everybody. There is no license. But 1 out of 2 cars, can you believe this? What a situation it is. Nowhere in the world it is there.
Well, Raamdeo, we have to take a break because we have to invite the 2 managements whom you have spoken about, Titan and HDFC Bank. We are taking a quick break, and coming back, we'll touch base with one of the 2 companies which are such big wealth creators.
Welcome back. We have been discussing the findings of the Motilal Oswal Wealth Creation Study with Raamdeo Agrawal, co-founder of Motilal Oswal Financial Services. And of course, among the companies mentioned is, among the most consistent wealth creators is TCS, or rather Titan. Titan is the company that's mentioned. So we have S. Subramaniam, CFO of Titan, now joining us. Mr. Subramaniam, good morning. Always good to talk to you. So, you have created phenomenal wealth for your shareholders. They would want to know that if ingredients are in place to repeat what you have done over the last 10 years in the next 10 years.
So I can't hear it clearly. Can you repeat the question, please?
I was asking that, do you have enough visibility to repeat the kind of performance that you have shown over the last 10 years for, say, next 5 or 10 years?
I think we do have reasonable visibility in terms of the economic, macroeconomic situation. I think we should grow as 7% plus for the next n number of years, at least 10 years, 15 years. So I don't see an issue with that. Other than any major calamity, global calamity, but otherwise we should grow. Trend towards consumer discretionary spend is increasing. I don't think gold will be out of fashion for quite some time in India. Jewelry therefore will remain. Watches, there are new avenues we are looking at, like wearables and so on and so forth, which are starting to take traction. So I think if you look at our businesses, and plus of course the new businesses that we are seeing, eyewear of course we want to strengthen, but if you look at other businesses that we are also exploring in the discretionary space, I think there are quite a few exciting options out there. So I think, we should be fairly optimistic of the future.
Okay, well actually we are discussing Motilal Oswal's 22nd wealth creation study, and there they have looked at competitive advantages which companies have, and the author of the report is with us, Raamdeo Agrawal. Raamdeo, you want to ask Titan any questions?
Yeah. Good morning, Mr. Subramaniam.
Morning.
Yeah. So 2 things. One is about the competitive advantage of profitability. So what guarantees, in simple words, your profitability over others? There are hundreds and thousands of small, unorganized players. So how do you compete with them? Because you are not number 1 anywhere. Nobody in city says that let's go to Titan and buy jewelry. So how you make so much of money?
Just the fact that we are number 1 in quite a few cities, but not across. You're right, absolutely right. Maybe we are fairly large as a national player, but you are right that we are not number 1 everywhere. We are, but we're number 1 in some cities, yes, for sure. The idea is, I think what should differentiate us possibly it may be a little flattering to say it ourselves, but I think quality of management is something which is different. We've been consistent. We've been looking at our own mistakes over the last few years and correcting them. If you look at the edge that we have on various aspects, I think design is a major advantage. Our ability to create very good brands, our ability to showcase them well through very good advertising, the store experience is very good. The back end we integrate extremely well. We have done a lot on the back end side, which most people don't even know. How we've done this whole concept of Karigar centers, parks, etc., which makes the whole process very sustainable as well. It is not just a question of creating wealth. It's a question of making it sustainable and ensuring that these the craftsmanship is not lost to the world. So a lot of that work happens, and it's a win-win. It's also a business proposition. So I think it's a whole lot of those things which make us what we are. So I would assume that those will continue. So, so what we do from that end should, I think, hopefully take us through the next so many years as well.
Okay.
Sir,
Sorry, sir, go ahead. No,
sir, you have grown at about 44% for last 12 years. Means literally every 2 years you have been doubling, at least in terms of profits, not so much in terms of sales. So, I mean, it will be not right for me to ask, what will the growth rates for next 10 years. But what are the 2-3 things which is going to the main growth drivers? I mean, starting from this year, like GST has come, demonetization has come, this hallmarking has come. Are you finding any of these things significant trends which can change your growth trajectory? Because literally you can supply any quantity of stuff. You don't have a capacity constraint.
No, you're right. I think I'll put this into 2 buckets. One is the regulatory tailwind that we seem to be starting to get now, after quite a few headwinds from 2012-13 onwards. So now at least things are changing. The formalization of economy is great for us. So demon and GST, etc., are seriously positive. So I think that will remain. But I think it is not enough if we only get that. It has to be also what we do. And one of the things we've actually said we've been stating for the last about a year or so is that we are expecting to grow our jewelry business 2.5 times in the next 5 years on a 16-17 basis. And for that, I think the building blocks we've talked about quite frequently have been various elements, and wedding jewelry is an area where we are not focused earlier. We are focusing on the high value studded we are looking at. We are looking at golden harvest giving us more today. Of course, network rollout itself is something. We are in 140 cities. I think we can today be in 250 to 300 towns in India. So there is a lot of runway as we see in terms of growth. So, we are also working on a lot of elements. So I think I'll put in 2 buckets, as I said. One is, of course, the regulatory tailwind, and the other one is what we ourselves are doing.
What may be the biggest challenge, Mr. Subramaniam?
Challenge, well, I would think if there is anything on the macroeconomic front which is adverse, gold rates, I have no idea how they are, because we do not actually plan on any gold rate basis. So if there is significant volatility in gold, it might hamper growth in the industry for some time. But having said that, I think our goal is to take market share irrespective of the industry growing. So how do we do that is going to be the challenge, and I think hopefully we should be able to get our growth numbers despite whatever happens outside.
Okay, we do wish, at least for this day, Bazaar is an endless show. It would have been a pleasure to have you with us for longer. Out of time, Mr. Subramaniam, thank you very much for joining us in this chat with Raamdeo Agrawal as well. We'll take a quick break, and we're getting another marquee company that has been a wealth generator. We'll be speaking with the management of HDFC Bank. Welcome back. Market still going strong and probably doing better as we are looking at the details of the 22nd wealth creating study of Motilal Oswal. The author of that study, or at least the lead author of that study, Raamdeo Agrawal, is with us. Now, one of the perennial wealth generators for Motilal Oswal and for the markets, of course, has been HDFC Bank, and we are now joined by Mr. Paresh Suptankar from HDFC Bank. Mr. Suptankar, thank you very much for joining us. Well, you know, banking is not voodoo. It's something that you know, people can learn. It's a perennial business, 500-year-old business. What is it that makes HDFC Bank tick, where their competition should logically have been easy?
So Lata, you're absolutely right that you know, banking is not rocket science. We are blessed with the fact that we have a tremendous opportunity both in terms of the industry itself growing as the economy grows and the opportunity to gain market share. So it really boils down to defining your strategy and then execution. And therefore, you know, if you had to sort of try and identify one element which has probably helped us create value over the years, it's been execution of our strategy, and that has necessarily involved balancing our growth with relatively stable margins and acceptable asset quality.
Well, Raamdeo, all yours.
Yeah, Paresh, good morning.
Good morning, Raamdeo.
Yeah, so one of the things is that we have seen private sector banks gaining over public sector bank right from 94, 95 when the doors were opened for them. But most of the guys whom licenses were given, along with HDFC, they have folded up. I mean, and three of them you bought it actually, and kind of merged into HDFC at various points of time. One happened times, I think, bank very early in the game, I think in 5-6 years time. So what actually you did different? I mean, now it's all history. It's 20 years gone. You've grown at 30-35%. From zero, you gained 6-7% share in the entire banking system. So what really went right in the sense that there will be a lot of lessons because the opportunity is still as big going forward. So can we find one or two new ones who are opening the doors with 50, 60 crores profit, 100 crores profit, and there are 8, 10 of them? Which one is going to do well? So we'll take your guidance how to find the next one.
Well, I think picking up others, Raamdeo, I'll leave to you, but let me try and share with you, I think, what went right for us.
Yes.
And I think, you know, if we, over the years, we've built a business which is probably more diversified than most others did, which is we recognize that, you know, banking goes through its own cycles. There are segments which see a spurt in growth and others that, you know, tend to go into a shell at a point of time. So we built a loan book, for instance, which is roughly half and half between wholesale and retail. So whether it's the consumption part of the economy which is driving growth, or whether it's the investment cycle picking up, you know, we are agnostic and we're equally well positioned. Secondly, you know, ultimately for banks, your main raw material is money. And I think we built arguably one of the most respected deposit franchises, which gives us a, you know, a stable and a low cost funding. It also gives us a customer base that we can then cross-sell a range of products to. And obviously we've, you know, got the advantage of a strong brand, technology, and above all our people. And if you sort of mesh all of this together, I think perhaps the secret sauce has been the culture of the bank, the fact that, you know, we continuously strive to do better. You know, Mr. Puri in particular, you know, ensures that nobody has a chance of getting complacent or hubris. And, you know, every time we believe we've done well, I think, you know, he puts out the vision for us to do even better. So I think the team has ultimately been able to create a certain culture in which we sort of have grown. And sure, the opportunity is large enough for there to be many others to gain as well, but we are reasonably confident of how we are positioned for the future.
What will be the big challenge for the future, Mr. Suptankar? You know, it's actually all of you are guys who started the bank. Will leadership be a challenge when the new line comes in?
Well, I think, you know, when you are an 80,000 strong organization, clearly, you know, leadership is important in terms of the vision and the face of the organization. But the organization couldn't have succeeded over such a long period of time if we didn't have several layers of leadership across not just senior management, but middle management and junior management and so on. So, you know, which is why I spoke about the culture and the values that we have been able to ingrain in ourselves. So, sure, you know, market competition, technology and digital challenges as they evolve, the changing expectations of our customers, all of these are, I think, par for the course. It's probably true for almost any industry. But I think the sheer, the potential opportunity that is there, as I mentioned earlier, between the overall pie in terms of the size of the pie as well as the opportunity to gain market share, I think we have a team which is pretty much well equipped to handle that.
Talking a little bit about technology, HDFC Bank has always been on top of the game as far as the technology in the banking sector is concerned. Paresh, I just wanted to ask you, what is the next big technology revolution that will hit the banking industry, and that could be, a big investment on your part?
See, I think more than what triggers that, I think if you look at what are we looking for technology to do, because whether it's robotics or artificial intelligence or machine learning or something which sounds a little less exciting. Ultimately, I think from a banking perspective, we are looking at technology doing two things. One is changing the customer experience, making it more seamless, making it, cutting turnaround time so that it's quicker and easier for customers to deal with the bank. And the second is to make the bank more efficient, make processes that much simpler and reduce costs. I think there will be a multitude of technological and digital developments which will enable this. And it's, technology is in many ways a commodity, right? It's available to everyone. It's whether you can pick up those developments and use technology to, as I said, make a difference to the customer in terms of experience and to the banks in terms of their efficiencies and cost, which will really make a difference to the banks.
Paresh, one of the things we have seen in the last 20 years is that from the commanding heights of 100% PSU banks, now it is, say, 2/3, 1/3 kind of thing, or maybe even lower for PSU banks. How do you see 10 years out, I mean, whatever is happening right now, would you say private sector would be more like 2/3 and public sector will be about 1/3?
Well, in the last 22 years that the new private sector banks have been around, there's probably been a shift of about 20% in market share from the public sector to the private sector banks, and probably in fact a shift of about 1.5% from the foreign banks to the private sector banks. And obviously when one tends to broad brush the public sector, there will be the better placed banks within that segment and the not so well placed banks. So the way I would look at it is that this gradual cannibalization of market share would continue. I wouldn't want to hazard a guess in terms of where we will be in 10 years, but I have no doubt that the private sector bank segment will gain market share in a growing market.
Thank you.
Okay. Mr. Suptankar, thank you very much for joining us. Raamdeo, we do wish we could have continued with this conversation for longer, but out of time completely. In fact, we have borrowed from the next show in a big way. We have to wind up on Bazaar, but we are winding up on a very high note, so a lot of trading ideas coming up for you on Chartbusters. Thanks for watching this very rewarding edition of Bazaar.